everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate filings into something you can actually understand. Today we're cracking open Oracle's latest 10K. And let me tell you, this document is like a level in a video game where you have to find the secret code. We're diving into the numbers, the plans, and the fine print to see what's really going on at this tech giant. So strap in, because we're about to find out if Oracle is truly the all-seeing eye or just another player in the digital realm. If you want to learn more about finance, markets, and investing from a plain English point of view, consider subscribing. We also have a Discord community linked in the description below where members share what they feel for future videos. First, as with any of these documents, there's a cautionary note, a warning from the company about forward-looking statements, meaning that anything about future plans is just an estimate and could change. Oracle says they anticipate making acquisitions, believe their cloud applications are a big opportunity, and that they can keep marketing to small businesses because of their cloud's low cost. Of course, everything in that sort of statements is subject to risks. Oracle's business is providing products and services for enterprise information technology, which is sometimes written as IT. They have products and services for things like applications and infrastructure. Oracle is organized around three distinct lines of business: cloud and license, hardware, and services. They want to sell more and more of their Oracle Cloud Applications (OCA) offerings, in essence allowing medical, financial, manufacturing, and business professionals to do their jobs on the cloud. It's time to tackle core details, and we start with the front page. There are a few interesting tidbits. Oracle stock trades under the ticker symbol ETCL on the New York Stock Exchange. The annual report is for the fiscal year that will end May 31, 2000 to last business day of the company's most recently completed second fiscal quarter. The aggregate market value of the voting stock held by non-affiliates was about 30 under $5 billion. Annual the voting stock held by non-affiliates was about 30 under $5 billion. All right, let's get to the real meat of this 10K report, and that starts with the numbers. We'll jump to this section. All right, let's start with the revenue table. In fiscal 2025, total revenue increased 8% to $57.99 billion. The Americas region is still Oracle's biggest source of income, contributing 63% of the total, with revenue growth of 10%. EMEA, Europe, the Middle East, and Africa grew 8%. And Asia Pacific grew just 3%. Breaking it down by business, we see that the cloud and license sector is doing the heavy lifting. Cloud and license revenue increased 11% to $49 billion, 4% to $2.9 billion. Services revenue also decreased 4% to $523.3 billion. Operating expenses increased 6% to $39.21 billion, with the company achieving 31% profit margin. Expenses for hardware went down 12%, but not in a good way. Hardware revenues are also down 4%. We can infer from this that Oracle isn't that interested in its hardware business. One more point from all financial tables is to note that stock-based compensation for employees is up almost across the board. Oracle clearly states here that its past strategy is to grow by acquiring companies, and mentions the risks involved, but they believe that their acquisitions enhance the products and services that they can offer to customers, expand their customer base, and provide greater scale to accelerate innovation. It is important for Oracle to successfully integrate these companies acquired. One of the possible complications, there can be regulatory challenge as well. Like any large tech corporation, Oracle admits that if it's not able to ensure data privacy or has cybersecurity incidents, this could harm its reputation, expose it to legal liability, and result in enforcement actions and fines. Oracle's a big target and has been the subject, so they are spending to prevent problems. It is a business necessity for them. Oracle also has to handle a broad range of topics that are not core to their services. Most importantly are ESG, environmental, social, and governance topics. For example, they have to worry about the environmental and ethical matters of their supply chain, where their hardware comes from and how it's produced, a highly inconsistent matter in varying jurisdictions. Also of note is that regulatory ESG related requirements could potentially cause issues and raise insurance and administration costs. Adverse results from litigation, such as lawsuits, can also affect the business, with results that can impact operations, results, and finances. If a lawsuit doesn't pan out the way they wanted, it could mean big losses and changes to how they do business. Our quarterly revenues have historically been affected by a variety of seasonal factors, including the structure of our sales force incentive compensation plans. In short, fourth quarter is always good, first is always bad. Changes in the leadership are also discussed and worth mentioning. Mr. Magolcik became President Oracle Cloud Infrastructure in June 2025 and Industry since June 2025. Management ranks also have changed as stated in this line. The company also mentions the forms for some arrangements. Before we end, here's another look at the numbers right from the company itself. Okay, having looked at many aspects mentioned in this 10K report, let's discuss a bit on our overall opinion and analysis. Oracle under Ms. Katz and Mr. Ellison appears a stable business that wants to continue a high rate of growing by acquisitions and increasing adoption of its cloud business. The biggest opportunities are definitely improving cloud services with machine learning such as LLMs, as well as reducing ESG and legal regulatory compliance costs. On the flip side, its traditional hardware business looks sunsetting, and there are no guarantees of the risks associated with cloud operations and maintenance of third-party relationships. Oracle is so big and ubiquitous that will probably continue to do well in its stock price within a range of $15 to IWLEMS, as well as reducing ESG and legal regulatory compliance costs. On the flip side, its traditional hardware business looks sunsetting, and there are no guarantees of the risks associated with cloud operations and maintenance of third-party relationships. Oracle is so big and ubiquitous that will probably... Alright, that wraps up our analysis of Oracle's 10K filing. What do you think about Oracle's strategy and performance? Are they a safe bet for this market, or do its competitors have advantage? Let me know in the comments. If you found this breakdown helpful, please give us a like and subscribe if you haven't already. Before you go, be sure to join our Discord to chat with fellow investors. Thanks for watching, and I'll see you in the next video.